In this video, we will learn what is the ideal product mix, A, B, or C for production quantity. We can apply the same calculation to calculate the ideal product mix for highest profitability in case of sales or selling decisions as well. In our example, we have some constraints. One is the labor hours available to produce the products, total limit of 500, and also the total raw material available is 2000 units. And as you can see, each of these products requires a different quantity of labor hours or material per unit. Before I go ahead, I have a question for you. You can see each of these products with their profit margin, and you can also see their profit. If you could produce an unlimited quantity of any of these products based on this scenario and this setup, which product would you produce to maximize the profit? Leave a comment and also explain why would you choose that product. What is your rationale or basis of selecting that product? So let's get into the calculation. Actually, we have one more limit or restraint, which is the demand. We don't have an unlimited demand in this case. As you can see here, if we produce all of the quantity per the demand, we will be in excess of labor hours by 100 and will also exceed our raw material quantity by 450 units. We will need some help from Excel's add-in, and this add-in we will use is the solver add-in. The solver add-in is usually available in data, and here you can see solver. And if you do not have this add-in already installed, you can also install it by going to File, Options, and then click on Add-ins. And here you see the solver add-in as an Excel add-in. So if you don't have it as an active, it will be shown under inactive applications. Click on Excel add-ins and click on Go, and then make sure you check the solver add-in and click OK. Before we apply the solver calculation, just want to show quickly how we have calculated the planned quantity of labor and raw material. We've used the sum product formula, which is taking the number of units for each product sold and multiplying it by the hours required per unit. Now let's apply the solver calculation. Click on Data, Solver. The first thing is, what is our objective? Profit maximization. So we will set the objectives. So this is the cell, which is the total profit for the sum of three products. We want to maximize it, so we select max here by changing variable cells. So what can we change here is the number of units. This is what we are trying to find. What is the ideal number of units to produce based on these limitations that we have? Select, in this case, this range, products A, B, and C. And now we apply constraints. So as I mentioned earlier, we have three constraints. Number one is that we have a demand forecast. To add this constraint, we want this range to be either less or equal to this range. We cannot go above this. So click Add. We know that the planned quantity cannot be more than the labor hours, so let's just add that. So cell reference, planned quantity should be less than or equal to, again, the limit that we have. And these may be the total number of labor hours available in your organization. We've added that. Let's add another constraint, which is the planned quantity. So this cell reference should be less than equal to the total limit of 2000. So now you can see we have three constraints. Let's solve this. The solver has determined that we should produce A and B based on demand, but where we can reduce the quantity in the total mix is product C, and that's really driven by these limiting factors. Here you see this table has also been updated. You can see that we will be able to utilize all of the material quantity, and we will still have some hours available, 16 hours available, which may be a good thing in case there is production downtime or other labor issues. So this will be the total quantity of units that we will produce. We have another question. We see that product B is the one with the highest margin, 43.3. Now, assuming we cannot change the cost and any of the other constraints, if you are asked what should be the change in price so that all three products have a profit margin of 43.3, how can you do that? For this, you can apply what is called goal seek. So click on Data, What If Analysis, and goal seek. So we will set cell H5, which is the profit margin cell, to value 43.3, or you can write it as 0.433. By changing cell, this is the cell that will change, which is the selling price, by changing cell C5. Click OK. Goal seek makes the calculation for you. So the selling price should be around 11.5 for the product to be sold at 43.3% margin as well. Click OK, and you can do the same for product C, and you see all of these products are nicely at 43.3% margin. If you change the price, this may change the planned quantity. Let's see if it does. So we go back to our solver again. All of our conditions still are valid, although we have changed the prices. So if I solve it, now you see it suggests a completely different calculation. You see that the planned quantity has changed, and now we are making more of product C and product A, but product B is the one that is produced less. Again, all of this is based on these constraints. They play a big role here. So if you find this video helpful, make sure you check out all the other videos in the FP&A playlist. If you are an accounting, finance, or FP&A professional, make sure you subscribe, and don't forget to answer the question I asked at the beginning of the video about the product you choose for maximum profit if you could produce any of these products without any limitations.